Good morning. A morning brief, video morning brief of the U.S. stock market. I'm Rich Paz for Critical Point. It is Friday, November 8th, 8:23 a.m. Eastern Time. Started out with another 44-minute morning brief, and I said, oh, come on, just don't even talk about what's really going on in the world. All right, hourly chart up, got two gaps here. I think that's a sign of exhaustion. It's time to bring it down. I think there's even a third gap in here, but probably people pay no attention to that. You have to consider when you have two or three gaps up, it's over and done with, okay? Don't have downside targets for you, but if it trades below 57.62 cash S&P 500, I think that's a clue for all the major indexes. The overall stock market is time to come down. It should come down to about 59.40 and fill that gap in at least, but that may be a sign it's time to come down and fill this bigger gap. I'm concerned it's too soon to fill that bigger gap. That may have to wait to next year, okay? I think people are behind buying this run up here. The level 1, level 2 traders sold from really about October 21st, a little sooner, about the time I gave my sell signal. They sold and they bought back here on this election, but you can see their average buy price was higher than their average sale price, so it cost them of selling and trying to manage risk and wheel and deal, okay? And it cost me too. Track record will slip a little bit on accuracy, no big deal. That'll come back over the years. Also, money-wise, so far ahead, I could care less. At least I'm trying to tell myself I'm not even paying attention. What did I miss out on? That was my own. I'm assuming you did better than I really, because I think we had fairly good analysis for you, but it's easy to rally this fast and that much overnight. It was easy to miss out, and they knew this. They're playing games on the Wall Street side here, okay? At any rate, I'm not convinced it will fill this whole gap. I wouldn't be surprised it can only come back some, and then they're going to run it higher again. If it is coming back to this gap, I wouldn't be surprised it's in January when we finally have to deal with Trump actually taking over. I will throw in a little news that Trump is saying he'd like the Social Security and people not to have to pay income under Social Security. I think that's a great idea. Surprised he's willing to do it. I'm suspicious he's just throwing it out there and Congress will reject it and they'll say, oh, well, okay. So I don't trust any of you on the right-wing side here. But at any rate, on the Congress is already starting, the Republicans that is, trying to put a bill in that they'll take away Social Security if you have a pension fund and retirement account through a corporation kind of stuff. I disagree with that. That's not fair. They paid money into that Social Security, and I'm all for. I'm now turning anti-rich. I want gigantic taxes here, and that's the way I'll be for the rest of the decade, but it's not going to work while under Trump. I'm sorry. And I do think the middle class and poor are going to get screwed. But the weird thing is, we might make a lot of money out of this stock market next year anyways. The bad side coming from the Trump side probably may not hit the 26, 27, which would have also been the bad side for Harris anyways. It's weird how these business cycles can work regardless of who you got. It doesn't matter whether it's devil, God, or someone in between. Business cycles just keep working anyways. So that's what we're looking at as the worst stuff is probably 2026 and 27, but it's possible we get some shocks here in 2025, and I was trying to protect from that a little bit. And I overdid it. Too much risk management. Risk management always costs you, but about the time you use it, you're probably going to get your head handed to you. By the time, I should say, about the time you don't use it, you're going to get the head handed to you. That's the downside potential there. I really don't know for sure this is really turning over yet. As we go to the S&P 500 futures, they were down overnight. Now they're coming back as we're preparing for the day session here. Here's what the model's saying. Level 4 top may be in place for the futures. We may have to wait for it to go up some more today to get the cash market on board. So it may stay up all day today and be down on Monday, but it can go down from today into Monday. So it can top at any moment here. So we'll see. Now, a down day today or sometime next week could very well be a sign of the more important level 3 top. And I'll show you that on the daily chart in a moment. But we think this is overdone here. It's time to back things off. We think we have too many gaps higher. Something needs to give here and back it off some. But we can be early yet. Everybody's kind of scared to sell this. Everybody's hopeful to get caught up and buy it. okay, and Wall Street wants to make Trump look as good as possible, and he's probably going to start claiming that this whole economy this year was all because of him and people betting on him coming and all that. There was definitely some betting there, but it was mostly because the economy is really good. Biden has handed Trump a really good economy, and the stock market was up because of that. So they're not yet worried over the downside of Trump. It's coming at some point, and it may come and go, and may still be rather optimistic and bullish next year anyways. This is the daily chart of the S&P 500, and it's basically, I'm sorry, it looks like I'm on the wrong chart here. Why is that? I'm on my daily list. I must have messed up here. I'm sorry about that. Let's go to this. Okay, that looks more like what I wanted. We want to zoom in here. All right, there's your gaps up. We don't have any model analysis in here, but it's due to come down. So I'm going to, and the NASDAQ cash looks the same. Dow Jones, I don't think it was quite as bullish, but it's bullish. All right, here's the model analysis. The model is saying it can top for level 4 now. It can top for level 3 now, and it can go down in the next week. We need a level 3 out in here somewheres. Now, the problem is it can stay up all of next week, then down for just a couple of days. It could just stall out, not really go down. There's all kinds of weird things, and the reason is the next larger trend is probably up into December. All right, so at any rate, so this is S&P 500 futures trying to turn down today. They're trying it to see what will happen. And if nobody wants to sell it, they'll give up and buy some more. They're going to push this high enough till they can track some sellers, okay? The interest rates environment may back off because the Federal Reserve lowered a quarter a point. They're trying to help out. Powell said no, he's not going to resign if Trump asks him to. So he's basically saying, I got to be fired, and I'm not so sure he can be fired. And I don't know how long his term is, okay? But I think he did the right thing of speaking up that way, frankly, for now. All right. Any rate, I do think we've met the conditions that it's time to knock this off. We got the election out of the way. We got somewhat of an idea where we're headed here, but we've got a lot to see what's really going to take place here, too. There's a lot that can go wrong, but there are things that can go right. Okay, so next what I'm going to do is go over to the weekly chart. I want to go to the S&P 500 first. Big up week. I don't know how well you did. I haven't really bought anything back in. I'm feeling left behind. My own fault of not buying up. I got a little carried away. My wife said to tell you, blame her because she got more nervous. She's watched me do what I ever want to do. She's been, we've been married for almost 30 years. She fired all her financial planners when we first got married. And people told me, what are you doing? Why are you managing all her money? She's an attorney. Aren't you scared of that? Well, anyways, I've done very good for my wife. I've done very good for myself. I've done very good for people following me, if they followed me well. I've managed some money here, and we've done very, very well. We're up like 40% in my fund or something like that this year. I sold out at the top back here, okay, or pretty close to it. You should have. I gave you the signals, hopefully in time enough, but too slow at catching this bottom. But the model is saying this is a level 2 bottom. That must have been a level 2 top is what it's saying. It's saying it should go higher into December, even though next week it should pull back for level 3. What it should do is test this breakout of these highs, this trend, pull back into it a little bit, move higher still. This is getting too high for fair valuation. I don't think the economy's doing that great. I may be behind, have to raise this, but I think this is telling us, yes, they're going to have to knock it down from December into January, at least January, okay? And maybe a minor knockdown. For the moment, this weekly indicator is trying to reject this rally, saying it's noise. Unfortunately, I can't prove this is a level 2, level 1. I just can't do it. So I'm assuming, yes, it's going higher into December. So I think you better buy pullbacks if you didn't already. And I just explained to you, level 1, level 2 traders didn't do any better than I did right at the moment anyways. They may have done a little better. I may yet learn. But we'll see if we can get this pullback here. So those are some of the more important traders out there, big-time traders. They had a problem with this one too, okay? They couldn't buy back fast enough. The run-up during overnight left a lot of people behind, and some Wall Street people and some billionaires that I'm aware of, especially Citadel, which I do not like. I'd like to destroy them. Because they use their information of their customers, their clients. I hate that. Okay, and I just don't like their overall attitude. And there's a bunch of other hedge funds out there that I hate. Anyway, the bottom line though is the bulls have been right. And Tom Lee over at Fundstrat, he played this one well. He pretty much ignored it. The problem is Tom Lee ignores a lot of my level 1, level 2s. When he steps up to the plate and takes one, usually he doesn't do as well as I, or we're wrong, this and that. He doesn't do good on the short-term intermediate time. He basically sticks with the very, very long term. And, some of his people hate him on a shorter term intermediate from time to time. In the end, just about all of them love him. Because why? Well, the stock market basically goes up forever, regardless of who's in the White House and what else is going on. And that's where I slipped up a little too, made too big of a deal out of this election. And apologize for that. Okay. At any rate, what we want to do is look for 60-50 here for a potential target and selling. And so they may just slam this right up next week on me and slam it right back down. And I think I'm ready to just not do anything for a very long time. If I have to, if they want to keep running it up, I'll just miss out of some glorious profit. Please don't do that with your own money. I think you could just probably blindly buy this, write it out on the downsides, and you'll probably just win anyways going into December. However, in January, I think you're going to be in trouble if you don't sell a little, but I could be wrong that there's just not a lot of downside. Dow Jones Industrials higher in December. Looks great, looks wonderful. NASDAQ looks the same way. This is the NASDAQ cash. That was the cash Dow Jones, by the way. Looks fantastic. Hesitated near that prior high. That was probably the true long-term high, and it's just going to go. But I got to warn you, it can still top in December for the latest allowed best calculation back in the 1800s, better still the 1940s. It can stop and get really ugly in 2025. It can probably be more sideways for quite a while in 2025. Can't rule out record highs mixed within all that, okay? And I can't rule out this might even be a 2017 is just great and wonderful for Trump. It could really do that all the bad stuff waits on Trump till 2026, which my business cycle says that's probably what should occur, because my business cycle was even saying even Harris is going to have problems in 2026. Everybody's going to have problems in 2026, okay? Now the key is, does Trump cause that sooner or gives us taste and bits and pieces of that, or is it actually pretty good? I don't know. I'll do the best I can, and I'll try my best not to be too emotional political here, but we actually have to follow some of these things because it's going to be such a dramatic change in policies that the politics could be a little more important than before. Now, this is the percent stocks of the S&P 500, and really they haven't bought much of anything. It was a small crowd that pushed that higher. That's a bit concerning and puzzling. But this is probably moving higher anyways, okay, into December. So it's probably okay for the bulls that if we're not careful, we can make too big of a deal out of it, okay? Mag 7, record highs, bam, way, glorious, glorious days. Trump's a savior, okay, all that's fun stuff. NVIDIA, same story, boom, and 1920s roaring bull market, but Trump may yet turn out to be President Hoover, and we have 70-90% crash later this decade. Even if he's not in office, it will probably be related back to him, okay? I don't think that's the case, and I was against those ideas, even though the model has shown them for years. Now I'm wondering, okay? Something we'll discuss way down the road, not today. All right, equal weighted index, bam, okay, looking good. Everybody's happy-dappy now, okay? Keep in mind, though, that only slightly above 50% actually voted for Trump, and frankly, I think there was fraud there, and Harris probably gave in a little too soon here. You can bet the other side would have been all over this and delayed it. The Democrats always try to take the better, higher road, be nicer. The Democrats need to put on some armor, get their sword out. We need to become crusaders. And I'm not a Democrat, by the way. Don't misunderstand me. I'm in between the Democrats and the Republicans here, okay? But the Democrats need a reflection. They need to learn marketing. They need to learn that, hey, the American people spoke. No question about it, even though it was not a majority really, but it was enough, okay? And even if there was fraud, and I believe there was in Texas and Florida, I'm not so sure that I would have canceled Trump. I think he probably would have won anyways. It just would have been a smaller margin. But we need to investigate that. We need to learn about that. But we need to move on too. Okay, I'm trying my best to give Trump a chance here. I'll do my best in my modeling not to get too carried away. But unfortunately, there's things that we wouldn't normally use in the modeling that is negative. We got to use it now just because of the dramatic change here that Trump he's going to bring these things in. And I have to pull them in to help protect us here. All right, any rate, foreign indexes, we got a lot of work to do by next week to see how they responded. Maybe I'll throw that in here. I said that I wasn't going to make this a long one. I think I've pretty much covered everything, but let's take a look at what's going on with the interest rates here. So the interest rates the model's saying probably top for level 2, should back off for level 2, and then probably higher in December, January. The stock market should not like that. Now, the problem is the Federal Reserve is literally shooting a cannon at the bond market saying, calm down, deal with all this new federal debt or any other kind of debt. You don't really need to charge that much for interest rates. Those investors, they're dumb enough to buy it and they got the money, okay? So they're saying chill out a bit here, all right? And they're trying to provide a safety net against things blowing up under Trump, the financial system, the economy. They already know there's things starting to break in the economy already. This bull run here for Biden would have been over anyways. Harris would have stepped into some issues in coming months anyways. They just want to make sure it doesn't get worse. They're doing their job in that regards. But I think they're also trying to help out on the Trump side, even if they don't want to. They're just trying to provide some safety net here. Now, the alternative is this is actually a level 1. This is a level 2, and we got a weird one here that's really too late to do, but it could work. What this would mean, pull back in the level 2, bounced only a little for level 2, not to a new high. Take it on down for a level 1, so the result is it's going to be down into January, Feb, maybe even March. That should actually help the stock market, calm things down, do away with some jitters, and make it even more bullish. I can't tell which it is right now, unfortunately, and I can't blame myself because the modeling, which may well be smarter than I because it's not emotional, not political really, even though it's dialing in some politics these days. This is overbought, saying yes, it ought to come down. That means oversold for bond prices, it ought to go up. We'll watch this. I'm a little leaning, and the model is leaving it open. I'm a little leaning more towards, really, it's probably 2 weeks from now that it tops for the top, but it may top at a lower. They just raised the interest rates some. I'm not convinced that's going to hold back the bulls in the stock market. Wall Street wants to paint a picture. This is a glorious time for the MAGAs, the Trumpsters, okay? And that he's already built this economy because he's the savior and does all that magic behind the scenes here. Bullshit. This was a Biden economy. Democrats should be proud of what happened. American people should be proud of it, but they're not. 50% of you are sourpusses. You know it. Come on. All right. Any rate, again, I'll do my best to try to make the best out of this Trump run here. It could be good, but these level 1, level 2s may have more downside at times. It's not going to change the timing. The model isn't going to run into a problem where I'm saying, I'm sorry, it's worked for 30 or 40 years, it's not working out. Never happened. It won't happen, all right? We're still going to do business on a time-based manner the way we've always done it. What will change under Trump is either more upside or not as much upside as we'd expect during the bullish times. Not as much downside to even more downside than what we'd expect. I think the over volatility increases, so more to the downside, really. So I got to be more interested in selling level 1, level 2s, but I got to buy them. I just got to buy them because it can go to record highs along the way under Trump. Past results are not necessarily indicative of future results. Bitcoin ought to go a bit higher here. Dollar can go down, but I'm concerned like the interest rates, it might flounder and go up a little bit more still. We'll see how it goes. Crude oil can work higher here a little bit. Okay, the commodities, I think, have a little bit of a conundrum, flustering moment here. They should be going higher because of the inflation risk under Trump, but the problem is the tariffs can go up so high that the interest rates have to go so high that the inflation is short-lived and we kill the economy, and we may actually have to worry of lower commodity prices. Hard one to play. Is it short-term bullish, long-term bearish commodities? Is it long-term bullish commodities, but a short-term bearish? I don't know.